Welcome to your weekly U.S. markets wrap. Stocks pushed to fresh highs last week as investors balanced softer economic data with growing confidence that the Federal Reserve could deliver more rate cuts this year. The S&P 500 and Dow closed at record levels, while the Nasdaq also finished higher, supported by strong inflows into equities and renewed interest beyond just the big AI names. The macro backdrop remains one of moderation rather than weakness. Recent data showed services activity slowing toward the break-even point, while manufacturing indicators remained mixed. Job growth appears to be cooling, though the delayed official employment report kept investors relying on private surveys that still point to a softer labor market. Inflation showed further progress, with consumer prices rising at a slower pace and the Fed's preferred PCE gauge easing to around 2.7% year-over-year. That combination of slower growth and cooling inflation kept hopes alive for another rate cut later this year, possibly in December. In corporate news, the spotlight stayed on AI and cloud computing. NVIDIA extended its strong run as investors bet that rising demand for artificial intelligence infrastructure would keep earnings growth robust. Oracle remained in focus, amid reports it could play a greater role in managing U.S. data operations for social media platforms, underlining how AI and data security continue to shape tech strategies. Investors are now turning their attention to the next major earnings wave from Microsoft, Apple, Amazon, Alphabet, and Meta, all of which will offer clues about the durability of AI spending and consumer demand heading into year-end. Gold had another volatile but strong week. After setting new records earlier in the month, prices held near the top of their range, ending around the low $4,000 mark per ounce. The drivers remain familiar: a softer dollar, easing real yields, strong central bank buying, and investors seeking protection against policy and political uncertainty. Even with midweek pullbacks, gold's uptrend remains firmly intact. In cryptocurrencies, volatility stayed high, but sentiment was broadly resilient. Bitcoin stabilized after earlier weakness and closed the week around the $110,000 to $115,000 range. Ethereum held near $4,000, with traders watching those levels as key technical markers. Institutional inflows into crypto-related products continue to build, helped by expectations of lower real yields and easier financial conditions. Still, price swings remain sharp, as regulatory headlines and macro news continue to drive short-term direction. Looking ahead, the coming week is packed with potential market movers. First, investors will focus on Federal Reserve communication. With the latest rate cut already behind us, markets will be listening carefully for any signals on whether more easing is likely before year-end. A dovish tone could support equities, gold, and crypto, while a cautious stance may strengthen the dollar and cap recent gains. Next, attention turns to fresh economic data, particularly inflation readings, jobless claims, and manufacturing surveys. If inflation continues to cool and the labor market softens, it could cement expectations for further policy easing. On the other hand, stronger than expected data might prompt investors to scale back those hopes. Earnings will also dominate the conversation. Big tech reports from Microsoft, Apple, Amazon, Alphabet, and Meta will offer a crucial look at AI spending trends, cloud growth, advertising demand, and consumer sentiment. Their guidance for the fourth quarter could set the tone for the rest of the market. Finally, traders will be keeping a close eye on the dollar and treasury yields. A weaker dollar and lower real yields would likely support gold and crypto, while renewed dollar strength could pressure both. In crypto, Bitcoin's current range between $110,000 and $115,000 remains the key area to watch, while Ethereum's ability to hold above $4,000 could determine short-term sentiment. In summary, last week reinforced the soft landing narrative. Growth is cooling but not collapsing, inflation is easing without reigniting, and the Fed appears willing to support if conditions weaken. Stocks are at record highs, gold remains near peak levels, and crypto is stabilizing after volatility. As we head into a new week filled with Fed commentary, major earnings, and key economic data, Markets will be watching closely to see whether this optimism can hold or if a dose of reality cools the rally. Thank you for watching. Follow the markets on Stockter.com, a social media platform crafted for finance.